Welcome to Trading Lounge and the ASX 200 here on the weekly chart. Obviously, we can see that we're in a very bullish trend at the moment. But as they say, during war, prepare for peace, and in peace, prepare for war, and keep a balanced mind on the subject. And that's what I wanted to talk today about, because on the weekly chart here, we've got this bearish count. We've had this bearish count for a long time, as you may know, and it's still, it hasn't really confirmed otherwise yet. That it's a bullish market and it's going to take the tops out here and all these sorts of things, because as it stands at the moment, this is a very simple wave 3 here to wave 4 here correction in terms of an A wave here, an A and a B and a C wave here for the B wave here, and then down for 1 and back for 2, 3, 4 and 5. Now, this B wave makes it corrective because the move down through here overlaps the top of wave 1 here. The only other move that this could be on the bullish side is that this is wave 1 here of a particular degree and wave 2 here for that, and then this is wave 1 of a smaller degree and then coming back for wave 2 here. But we do also have a 5 wave structure down here that we can count as bearish as well. Now, if this was going to be wave 1 here, and this would be 1 and 2 and 3 and 4 and 5 here, this move up here, we could count it. It appears more bearish than it does than being bullish. So this is why I've labelled it wave A here, wave B with a 61.8% pullback, and then wave C. And wave C is quite simply just 5 waves to the upside here, and just above the 5,500 here is the 61.8% mark here, so that would be our target. So what we can say is that it's we're going to get 5 waves up here, but beyond that, we're going to need to be very careful. Now, if we get to the 5.5 level here, and the market doesn't have just to stop at the 61.8% mark, it could go sort of higher. This is the actual block here. So we can see the market came down here, found support, found supply resistance, came down. So really this block here is the resistance. So technically anywhere in this space here would be fine, as the corrective rally here. So there is a bit of space to go higher. If there's a scenario that we came up to the level here, we had a bit of a correction here, and then we moved up here, and then I could see that we actually had an ABC correction here, and then we found support here. Well, I'd trade what I see, and I'd go long from that point, But if I don't get this sort of pattern at the 5.5, then I'll be very concerned. So I think that in terms of trading to the upside here, our target is 5.5 and slightly above, but that's really as much as I can confirm at that stage. We will look at how the S&P 500 is playing out at that point as well, and if it's finished its 5 waves as well. But be very mindful that the S&P can top out at 2,300 and something or other, or even higher at 2,500. We're yet to see that in its structure so far. So, we just need to be a little bit careful. So in the daily chart here, because it does count quite nicely down here from the top here in 5 waves here, as terms of 1 and 2 and 3 and 4. Wave 1, 2, 3, 4, 5. So it was all quite fitting, And I can count 5 waves up here. There's different ways to do that. But at the end of the day, it counts much better as an A wave and a B wave and a C wave here for the A wave, and then the B wave and the C wave. So basically a double zigzag correction for wave 2. Now, the move up here, let's just sort of focus on that a little bit. So from this 61.8% retracement level area here, where we're looking at wave 1 and 2, so we're moving into wave 3 here and wave 4, and then wave 5 can be, this could finish anywhere up here. But our main trading goal is to 1, 2, 3, 4, 5, bingo, complete, finished. Okay, then we have to chill out and just see what occurs here. But this leg here will have 5 waves in it, and the fifth of the fifth is going to be our target area, wherever that may be. Okay, so this is, just want to point out, this is where we're looking for. So that's how long we've got to trade to the upside. Now it's possible that, so this makes this an A wave and a B wave and a C wave. So and it can fail from that point. So it's possible that we can look at this as wave 1 here and wave 2 here, and then this is all wave 3 moving up here. But this wave 3 that's moving up here would need to be longer than this wave 1 here. So this is something else that we can be looking at as well here. It could be the same length as well. So if we took this here and just popped that there, and then took a copy of that and popped that there roughly. So that brings us, so if this finishes 5 waves shorter than this length here, then we know that the corrective pattern that we've got as an A and a B and a C wave will play out and then move down from that point there. So let's see how we get there. But I just wanted to, everybody will be thinking about how far it's going to go and what we should do and what we should be doing and so on and so on. But in my small little brain, I think that we should just track this 5 wave structure to here, get out, or unless we've got some very clear lead from one of our sectors, be it resources or banking and even the S&P 500 and so on. But even in the S&P 500 and so on, we're still looking for this here. Anyway, we'll play to this point and then we'll get out, because even if it's so, if this was a 1 and 2 and 3 here, then wave 4 would be sideways and complicated and all those sorts of things would be pretty big. So it's a time to sort of sit back and, the money that we make in a trend, we don't want to give back in a wave 4, and that's exactly what happened. So we need to stop, just stop. Okay, so enough said. Now into the 4-hour chart here. Our job is to look for those 5 waves up. Okay, so in this instance here, we've got wave 1 and wave 2 here. We can see that in a bit of I've got it counted a bit differently, but wave 1 here, wave 2. So we're looking for wave 3, 4, and 5 to make wave 3 here. Okay, so then we'll be looking for wave 4, and which we can handle, and then wave 5 here. There'll be something like this here. So that's kind of what we should be trading to, really. But we'll nut it out in much more detail as we go. But generally, that's what I think that we need to be focused on. So let's just put this here. I'll just work on the hop. If I've got to work, you can be the workman and watch, so to speak. That's probably not quite true, but there we go. So that's what we're looking for. We're looking for 5 waves, okay? I'm just going to save that so I don't have to come back here. Moving on to the 2-hour chart, just to get this in a bit more detail now. So there's not much of a change since we spoke yesterday. Now, we've got this as wave 1 and 2 here. Now, on the 15-minute chart, I've got this as wave 1 and wave 2 here, but it's just as valid to put it here as such as well. Not that it makes a lot of difference at this stage, but what we're actually looking for, as you know, we're looking for wave 3 to the upside here, and with that, we're looking for 5 waves, so 1 and 2 and 3 and 4 and 5. So we've got a bit of a time, and I think we've got old highs here, haven't we? Not much, but what's at 5-4? Anything interesting? Yeah, it's a fair bit going on there, really, isn't there? So expect a correction at 5-4. So let's go in and have a look at that correction that's just about upon us on the 15-minute chart here. So look, I've got wave 1 and 2 here, but as I just mentioned before, I've had wave 1 and 2 over here. It's not a big deal, but it's something we'll just sort of bear in mind, and this will play out later on towards the top, but we don't have to concern ourselves with it at the moment. But what we need to look at now is that I was expecting this wave 4 to come back to the 5-3. So apologies about that. It's just that we're in a very strong third of a third of a third, and things don't always go according to plan. So looking at that previous chart that we looked at, we could see that there was a fair bit of resistance at 5-4. And we would be looking from wave 3 to wave 4. So this is the wave 4 of 1 lesser degree. So it's quite possible that the market can come back to that area there. Okay. Will it? Not sure. Hasn't been doing that so far. Hasn't been very strong retracement levels. So it's probably unlikely, but it would be something that you need to accommodate. At the same time, we're very confident of the structure that we have to go to the upside in terms of those blue wave, 5 waves in blue and in green and so on. So it's probably worthwhile if you either make a decision now to, take profit at 5-4, or you accommodate this wave 4 pullback to wherever it comes to. You can take other small part profits and so on. Counting from this wave structure here, it looks like we've got wave 1 and 2 here, and then this is all part of wave 3 up here. So there's still more today. When the cash market opens, the banks will pop up and so on, but we're looking up at this. So today's Tuesday. So in a bullish market, we can expect Tuesday, Wednesday is going to be more important. So Friday's been bullish, Monday's been bullish, Tuesday comes in with a bit of profit taking, but Wednesday comes in with a V day. So it's down in the morning, sometimes just for a short wee while, like sort of 11:30, but it can come down to sort of the more deeper into the lunchtime period. But Wednesday is more like a V-shaped day like this here. And remember that Thursday is the bear day, but we want to see that on lower volume. And then Friday is the bullish day, as Monday is bullish as well. So, buying Thursday afternoon and then building in on Friday morning, Friday lunchtime, Friday close, and catching that Monday thing is kind of, that's trading the SPY of the CFDs, whatever they are. So that's what we're sort of looking at, and we're quite neatly into that bullish cycle now, obviously. So So the other things that we need to discuss here are that 5,400 is where the larger correction is going to take place. Now, the first things that we can expect, as always, is that the top of 5-4 would be group 1, so it's 10, 20, and 30. So at any stage, if it's okay for the market to trade above it, but if we find tested support on the top of group 1, 10, 20, and 30, subgroup 1, if support is found here, then you need to know, then you know that the market has left this number here. But it can trade above it, but failing to find support on it means that it still belongs to 5,400, and that's the same for group 1 and group 2 here. So this is where the wave 4 correction is likely to play out, in this group 2 and group 1 space. So that's what you really need to be prepared for as such. Okay, so we can pretty much look at it like this here. That's where that correction will play out. So think about that, because you might get little signals in there, or you might think you'll get in or you'll get out and all the rest of it. You're far better off sort of keeping your fingers off the button, take a few contracts off or whatever, so you can breathe properly, and then just let it go, because we're in a very confirmed bullish market here. So there's no reason really to start poking it with a stick, because it will only bite you. Alrighty, cheers.